You have a plan, a rationale, and you trust your process. That in itself is a competitive advantage. One of the best things about small investments with high potential returns is the long term compounding effect. If you repeatedly find opportunities that outperform the S&P 500, even by a few percentage points per year, the difference in your portfolio's value over a decade can be staggering. Think about it. If the S&P 500 averages 10% annually and you manage 15%, that 5% difference compounded over 10 or 20 years can significantly outperform a passive index approach. It means retiring earlier, achieving financial independence sooner, or having more resources to invest in your passions. If you're struggling to beat the S&P 500 and working long hours, you need a strategy that fits into your lifestyle. The beauty of the small investment approach is that it doesn't require massive upfront capital or day trade. It's about finding a few growth stories to latch onto. You're not trying to catch every big wave. You just need a few solid waves that can carry you above the average market returns. With the discipline, patience, and a willingness to learn from mistakes, you can gradually turn the tide in your favor. Of course, the stock market is volatile. Even great companies go through rough patches. When you start small, it's easier to hold through volatility because you haven't risked your entire portfolio on one pick. You have the emotional resilience to weather the storms. And if the company's fundamentals remain strong, that volatility can be an opportunity to add more at a lower price, eventually enhancing your returns. Emotional control is easier when the stakes are smaller. As your investments prove themselves, you can scale up carrying the same disciplined approach forward. This reduces the chance of panic selling or making emotional decisions. Over time, you can repeat the process, gradually building a portfolio of small, well chosen investments. Keep track of their performance, learn from the outcomes, both good and bad. Don't expect overnight transformations. The stock market rewards patience, learning, and adaptation. By consistently following the right approach, you create a pattern of behavior that can lead to better returns. You might not top the S&P 500 next month or even this year, but over several years, the cumulative effect of these disciplined small bets can outperform a passive index strategy. You don't have to spend hours every day glued to financial news. All you need is a structured approach that fits into your lifestyle. Small investments are your training ground, your laboratory for experimenting with different ideas and methods until you find what works best for you.